On that, I want to bring in Eddie Gabor, co-owner at the Key Advisors Group. Eddie, thank you so much for joining us this morning. What's your reaction so far to the second trading day of the week and quarter?
So look, we had very light volume yesterday, and we've told our clients that we're looking at this quarter as probably one of the toughest quarters that we will face this year because we believe this quarter is going to confirm that we are in a recession. And unfortunately, it's our opinion that this market has not properly priced that in. So if you look at the last 15 months, we've had a lot of bear market bounces. And each time we get these bounces, it brings a lot of hope to investors and sucks investors in. And then we make a new lower low on the markets. And unfortunately, that's what we think is going to ultimately happen again this quarter. We think we're going to hit new lows. And then the real buying opportunities, at least for our clients, because of how high of a cash position we have, we think will come into the summer months. So we'll start dollar cost averaging into the summer and into the fall and expect a bounce towards the end of the year. But look, 3 weeks ago, we were worried about a banking crisis. That has not gone away. So the macro dynamics, unfortunately, are deteriorating month after month. And in our opinion, macro matters. And it's going to show this quarter, in our opinion.
Eddie, I'm glad you mentioned the banking crisis. Of course, to your point, that situation has not ended, although there has been some confidence returning to those regional bank stocks. But I want to discuss some other market-moving news that we've been keeping an eye on, which is, of course, that OPEC Plus cuts announcement. Some experts speculating that that could drive fears of inflation, recession, of course. Do you think that's the case? Are the markets reacting appropriately?
So I believe we have the recession has already started. I mean, again, you look at the manufacturing number that came out yesterday. I think that's 5 straight months of deceleration, and that typically happens in a recession. In regards to the oil, this presents a big problem for the Fed, right? Because they're trying to keep inflation down. The bulls want them to pivot and cut rates or stop raising rates, but they've said time and time again they're not going to stop until the job is done. We are far away from their 2% inflation goal, and having oil spike to 80 presents a big problem for that because we were hopeful that at least oil would kind of stabilize at a lower level to keep inflation down. So they have their work cut out for them, and that's another reason why we don't think we are out of the woods yet by a large margin.
Now, Eddie, to your point here, you're saying that the recession has already started. Is there anything that the Fed can do or officials can do to ease the impact of this?
Unfortunately, it's our opinion that the damage is done. I mean, look, let's look at it from a bullish viewpoint. The bulls are saying that they're going to pause rate hikes next month, and they might do that. But our problem is the cost of capital has increased so much that a pause does not solve that problem. If I take a look at everything globally, the cost of capital is the biggest problem for corporations. Think about all the commercial loans and corporate debt. We have record amounts of debt that has to get refinanced over the next 2 years, and the rates that they're going to have to refinance at could be 2, 3, 4 times higher. That's not going to cash flow for some of these businesses that are barely making it. So unfortunately, we think we're going to see more bankruptcies in the coming months. You're going to see small businesses go out of business, unemployment spike, and this is a normal thing that happens when you're going into a recession. So at this point in time, there's nothing the Fed can do to stop this economic recession from happening.
Certainly not something that investors or Americans want to hear, Eddie. But quickly, I have to ask you about another big story that we've been watching. Trump, of course, has arrived in New York for his arraignment. How, if at all, do you anticipate this could affect markets?
I don't really look at that as a market-moving event. You know, when you take a look at politics, you know, it may have a one-day movement one way or another. We focus on macroeconomic dynamics because fundamentals economically and with profits are certainly going to have a lot more weight than some headline that's going to move the market one way or another. So we're not even paying attention to that.
All right, Eddie Gabor, co-owner at the Key Advisor Group. Thank you so much for your time.